All right, let's get into it. One of my absolute favorite ways to hunt for new investment ideas is to see what the best investors in the world are actually doing with their money. So today, we're going to peel back the curtain on the top stocks that Wall Street's sharpest minds, the super investors, have been snapping up. Okay, let's dive in. I mean, it's a simple question, right? But it really gets to the heart of what we're trying to do here. Instead of just guessing or chasing headlines, why not learn from the people with a proven, long-term track record of success? That's exactly what this is all about. So who are these super investors anyway? Well, put simply, they're the heavy hitters, managers with over $100 million in assets. And here's the magic part. They are legally required to report what they're buying and selling every single quarter. This creates an incredible treasure trove of data, letting us see exactly where the smart money is flowing. So in our first section, let's explore what it really means to follow these financial giants, and more importantly, what we can learn from their collective wisdom. Now, look, the goal here isn't to just blindly copy every single trade they make. No way. The real power is in spotting the trends. When you put all their moves together, you start to see these massive patterns emerge. You can see which sectors are gaining favor way before it becomes common knowledge. So in this next part, we're going to see exactly how this works in practice. By digging into the data, a really clear picture starts to emerge about where these brilliant investors are finding opportunities right now. This is the million-dollar question, isn't it? If all the best investors are rowing in the same direction, you've got to pay attention. We need to understand not just where they're going, but why. And the answer is, well, it's fascinating. They're not chasing the hottest, most talked about stocks. Instead, we're seeing this really clear trend of money flowing into sectors that are kind of out of favor, specifically healthcare. It was the most bought sector last quarter, and it's right back at the top again. This chart really puts it all into perspective. Just look at this. The broader market, the S&P 500, is trading at a PE ratio of 22. Historically, that's really expensive. But then you look at the healthcare sector. It's trading at a PE of just 16. That's actually cheaper than its own historical average. Super investors are seeing this massive discount, and they are pouncing. Okay, now let's get into the fun stuff, some specific examples. By looking at the actual stocks they're buying, we can see the different strategies they're using to find value in this kind of market. First up, Microsoft. Now, this isn't some shocking unknown name, but the reason they're buying it is absolutely crucial. They're not just buying a tech giant, they're buying predictability. And this quote really nails it. Think about it. During a recession, a lot of companies just see their earnings completely collapse. But Microsoft, their ecosystem is so deeply woven into the fabric of our economy that you can pretty much guarantee their revenue and earnings are going to grow year after year. For that kind of certainty, investors are willing to pay up. Next, we have Alphabet, Google. This is a classic case study of super investors looking right past a negative narrative to see the incredible strength of the actual business underneath. What's so interesting about this slide is the huge gap between perception and reality. The story you hear is that AI is going to destroy Google's search business. But the financial reality, search revenue just grew 12% year over year. People think it's some wildly expensive tech stock, but it's actually one of the cheapest of the big tech names. Super investors see this, and they've been loading up on the stock for quarters, betting on the hard data, not the drama. And now for a totally different kind of play, Disney. This isn't about predictability or a misunderstood giant. Nope. This is a straight-up bet on a massive corporate turnaround. This timeline really tells a dramatic story, doesn't it? Back in 2019, that massive Fox acquisition went wrong, and their free cash flow just collapsed. Then they had to cut the dividend. By 2022, things looked seriously bleak. But look at 2024. Cash flow is recovering in a big way, and the dividend is back. Super investors are betting that this is just the beginning of a huge comeback. And if you want to understand just how bad the problem was, look at this number. This is Disney's return on invested capital. It's just a measure of how well they're investing their money. For 6 straight years, that number was so low, it meant the company was literally destroying shareholder value, getting less money back than it was putting in. The fact that this is finally turning around is the key signal that has these value hunters so interested. That brings us to our final and maybe most interesting case. We're talking about the single stock that was most frequently bought by super investors this past quarter. And let me tell you, it is the ultimate contrarian play. So after looking at tech titans and turnaround stories, what was it? What was the number one company that super investors collectively decided to pile into? United Health Group, LEP, a healthcare company, which fits that whole undervalued sector trend we saw earlier. But believe me, the story here is so much deeper than that. And this slide just perfectly captures the huge divide between the average investor and a super investor. On one side, you have retail investors seeing these scary headlines about a DOJ investigation, and they're selling, driving the stock down. But the super investors, they see a massive opportunity. They see company insiders and even members of Congress buying the stock. They see a company trading at half its normal valuation with killer dividend growth and projected earnings growth over 16%. They are buying because the business itself is strong, even if the headlines are ugly. So, what can we all learn from this? Let's try to distill this whole super investor playbook down into a few key principles that you can actually think about. So when you boil it all down, the super investor mindset really comes down to 3 steps. First, find quality businesses. Think of Microsoft's predictability. Second, hunt for value. Find those great companies when they're on sale, like Google or the entire healthcare sector right now. And third, and this is the hard part, be a contrarian. Have the courage to buy when everyone else is selling out of fear, just like we're seeing with United Health. That is the core of their entire strategy. And that leaves us with one final thought. As you look at your own approach to the market, whether it's focusing on quality, hunting for value, or being contrarian, which of these powerful lessons will you put into practice first? Thanks for tuning in.